A splendid evening it is to you viewers. Welcome to Equity News on Equityaxis, your cross-section of stock market developments and of developments in the Zimbabwean economy. Thank you for joining us as we broadcast live from our Hampton studios. I'm Ibn Nabunda. Let's get to business. Civil servants today took to the streets to express their dissatisfaction at the deal that has been offered by government in as far as salary increments are concerned. Yesterday, civil servants sat down with government to deliberate on matters regarding the raising of their salaries. There was, of course, a stalemate and a deadlock where that particular matter is concerned. Basic story being the cost of living has escalated, with inflation having come in north of 353% in the month of September. And the deal that has been tabulated by government seems not to be flowing in tandem with the rising cost of living, not to mention the increase in as far as fuel and the basic commodities. Well, during the course of the day, as the civil servants were out on the streets, ZBC, of course, engaged conversation with the chairperson of the Apex Council, Mrs. Cecilia Alexander. Let's have a look.
For better salaries, not be only better in terms of quantum, but the mari inotenga nezuro takadedzwa nehurumende vachitsvada kuti pafeedback yesubmission yatakaitamuswa 24 October tasvika kuya hurumende yakati haina kana mari yekutipa, asi tikatarisa zvinhu mumarket zvinhu zviri kukwira every day. Saka tikuti isusu tosacrifice by lese civil servants. Saka machi iyi haisi confrontation kana chii, but kuchema kuti zvakanzi mwana asikachema anofira mumbereko. Saka toda kuti chema kuti nzwikwe. Tikasachema mhuri dzedu dzichafa, tikasachema nyangwe nesu tichatadza kana kupa vana vedu chikafu. Vamwe vakutotadza kudhara kupa vana chikafu. Saka tikuona kwazviri kuenda uko hapana chiri kuita beta, zvinhu zvikuramba zvichikwira. Saka toda kuti ivo the powers that be vanzwe zvichemo zvedu, vatinzwe, vakwanise kutipa an adjustment yesalary before this month, to cover from now up to December. Tinozoita kuti tizoita mademonstrations ndechekuti vanhu vane problem. Toenda kuhurumende totaura vanhu kuti vanhu they incapacitated. Hurumende yotadza kurespond good time. Hurumende yoratidza kuti haisi sensitive kuma issues evashandi. Saka isusu tiri maorganization, in fact tiri maorganizations akawanda uya panapo, tiri maorganizations anomirira zvido zvevashandi. Saka isu hatigoni kungopeta maoko, vanhu vedu vachiri uye sacrificed. Vanhu vedu takataura kuti havachakwanise kuuya kubasa. Government expects people to report for work, but vachinatsoziva kuti mari yavanotambira haikwani. Tazoda kuverengedza tichazoona kuti vamwe vane maofisi makuru takanzwa kuti vakapiwa mari dzakawanda chaizvo. Saka isusu tisi tinofanira kufa here. Saka nyaya iri pano ndekuti titi isusu tioneiwo tofa here. Isusu tiri vashandi zvokuti hurumende ichawana mari kupi kana kupi hazvisi zvedu. Isusu chedu kupa service kuhurumende. Kana tapa service kuhurumende, hurumende yotibhadhara zvinoenderana nekuti.
So, with what we have playing out in our economy, Finance Minister has indicated time and time again that he's trying to bring a fiscal consolidation of some sort, but it then becomes tricky with the way in which the costs are actually playing out. But again, let's have a look at some of the visuals from that particular march to get a little bit into the gravity of the matter from the perspective of the civil servants.
We are very happy with the escort, but comrades, mandate yedu haisi yekugadwa, mandate yedu ndeyekuenda kuna MTHULI. MTHULI weshamwari ndikakunapeya ora ndigere ndikakunapeya mai yangu shamwari 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 ndikakunapeya ora ndigere ndikakunapeya
Now, in a bid to sort of cushion workers in urban areas or metropolitan areas, if you may, government has availed additional buses for the Bulawayo metropolitan area. Government says that it has rolled out 16 buses and more buses are expected to follow. This, of course, be government's attempt to address the worsening macroeconomic conditions in the country. But the question remains, at what cost are these transport subsidies being offered to the public? Meanwhile, President Edi Mnangagwa today launched the $12 billion initiative in Gweru while he engaged players from the Midlands as well as southern provinces on issues with regards to the mining sector. While speaking at that particular event, the president did indicate the government was keen on fulfilling its promise in as far as the endeavor to achieving a $12 billion mining industry in Zimbabwe by the year 2030. In other news, MIEKLES Limited has issued a cautionary statement indicating a partial regulatory approval in as far as the disposal of its flagship hotel, MIEKLES Hotel in Harare CBD, which is a 5-star hotel that has been a part of MIEKLES for decades. And now, of course, the caution does indicate that in as far as that transaction with Al Buabi Investments, a Dubai-based entity, there is a partial approval. Now, of particular interest would be the fact that there is need for approval from the central bank, the Zimbabwe Stock Exchange, as well as the Securities Exchange Commission. Delta Corporation, a listed heavyweight, today issued a quarterly report indicating the performance of the entity of the second quarter ended 30 September 2019. Of particular interest is the fact that where the lack of volumes are concerned, there was a 40% decline in the second quarter vis-a-vis a 48% decline in the half year ended 30 September 2019. On to the sorghum beer side, interesting matrix there with a 15% decline in the second quarter as well as a 29% decline in the half year in question. This, of course, is indicative of depressed demand in the economy with worsening macroeconomic conditions, a weakening exchange rate, soaring inflation, as well as liquidity issues that are also coming into that particular matrix. Now, this concludes our evening news bulletin. Up next is a look at the news in News Review. Don't go anywhere.
Climbing to the top takes more than just hard work and smart choices. It's the passion that drives you from within, the endurance to keep going through difficult times, and having a very clear vision of how to succeed. That's what we strive for at CBZ. We're a diversified and innovative listed financial services group in Zimbabwe with a complete range of activities including banking, short and long-term insurance, asset management, and property investments. CBZ has been a pinnacle for stability in the economic landscape of Zimbabwe, stemming from our deep-rooted values, our excellent customer service delivery, and our corporate vision to strive for excellence as a global competitor. Our continuous investment in research and development will cement our promise to provide customer convenience utilizing state-of-the-art technology. Relationships are at the core of what we do. We understand, however, that strong, long-lasting partnerships are not built overnight. With over 3 decades of wealth management, we have come to understand our clients and their specific investment requirements. Our unique mix of skills ensures that investment opportunities are examined from all perspectives. The balancing rocks of Zimbabwe have weathered the elements for thousands of years and stood the test of time, like majestic reminders of the fine balance of nature. They challenge our perception of what is possible and what endures. Just as CBZ has weathered the economic storms and remained steadfast throughout the turbulence of unsettled economies. Achieving the impossible through resilience and stability, we balance the elements of hard work, dedication and experience, making us your ideal partner for success. Climbing to the top takes more than just hard work and smart choices. It's the passion that drives you from within, the endurance to keep going through difficult times, and having a very clear vision of how to succeed. That's what we strive for at CBZ. We're a diversified and innovative listed financial services group in Zimbabwe, with a complete range of activities, including banking, short and long-term insurance, asset management, and property investments. CBZ has been a pinnacle for stability in the economic landscape of Zimbabwe, stemming from our deep-rooted values, our excellent customer service delivery, and our corporate vision to strive for excellence as a global competitor. Our continuous investment in research and development will cement our promise to provide customer convenience.
Welcome back, viewers. It's now time for news review, and with me on set is Equityaxis Chief Analyst Respect Gwenzi. Respect, good evening and welcome to the show.
Thank you. It's always my pleasure. Good evening to you too.
Beautiful. Now let's start by talking about issues playing out at a macro perspective with regards to the civil servants particularly. They're taking out to the streets advocating for a salary increment vis-a-vis the harsh macroeconomic setup that's prevalent in the country. What is your assessment of the situation that we have developing there?
Yeah, I think it's quite volatile when you're looking at the broader service delivery in the country. Basically, all the key services that are supposed to be offered to the citizenry have completely gone out of service. So I think that's a quite critical situation that we are in as a country. We cannot continue on this path. I'm sure it's happening in terms of health, it's happening in education, it's happening in terms of other areas as well. So it's quite critical, and any country that wants to achieve 2030 developmental goals, they might not be able to do so. You might not be able to do so. And anyway, to achieve sustainable growth, you really have to be looking at key service deliverables such as education and in health. And so we're currently not in a good space as an economy. There cannot be any kind of sustainable growth that can arise out of this situation. But what government is saying is that we are in a transitional period where we have to face that kind of volatility, and such hardships are inevitable. But my own perspective, when you try to look at how the outlook will play, you try to look at the 2030, because the excuse that government is bringing through in terms of the current situation is that we are already in November and it's only less than 1.5 months before we get into 2020. We are already doing 2020 budget preparations, and government is targeting to increase that budget to 28 billion. But my minor simulation which I did on the numbers is that when you're taking your budget from 18 billion to 28 billion, if you are leaving out your ratios in terms of how much you're distributing to civil service salaries, if you are going to maintain the same ratio to total expenditure, I think that there won't be any salary increases beyond $2,000. In fact, that figure gives us anything between 1.6 to 2,000 RTGS dollars as a 2020 budget, given a $28 billion budget. So I think that means, if it comes to be that we are in a sustained crisis as an economy, from a perspective of service delivery, from a perspective of growth as well, because all sectors are currently going into that state where demand is falling. Because where demand emanates from an economy is people purchasing goods and services from the private sector. And therefore, when there's no such demand, when people don't have the money to spend on such things, it simply means there's no production, there is low growth in terms of our production as well. But I think the conundrum here is further worsened by the fact that we are seeing ourselves in a position of high inflation, as well as low or falling GDP, that gives us a stagnation of sort, a stagflation of sort.
But to what extent really can government hold off, these salary increments? Because I mean, the calls are growing loud and louder, and can this ZANU-PF-led government continue to hold people at bay? I mean, their political interests as well that have to be looked out for.
I think MTHULI has tried to fend off pressure from the private sector, from the public service, in terms of trying to contain his own budget. But I think there is a kind of deception that's going on here. You find civil service wage bill accounting for about 40% of the total expense. In 2016, 15 getting backwards, that ratio was about 65 to 70%. So literally much of the expenditure in terms of government was going to the civil service. So he kind of corrected that. But what happens with this fraction or the remainder of the budget? That's where we're seeing bloated expenditure in terms of foreign travels by the executive. We also see command agriculture financing and some other infrastructure projects and so forth, funding of parastatals and so forth. And this is where much of the excesses in terms of our budget is coming from. This is where all the corruption issues is coming from. I think this part, minus your civil service wage bill, is where the problem is emanating from. So I think going forward, we are likely to see further instability. There has to be creativity on the part of government to see how they can unlock this crisis. Why? Because we do not have ready sources of liquidity or cash flows that can counter or maybe try to cushion the current challenges that we are having. So you cannot continue suppressing demand or continue to suppressing salaries. Obviously that is not sustainable. We are likely to see, you saw what was happening today in town at micro level. People went out into the streets. I'm sure that can actually escalate over the next few months if there is that sustained compression of salaries. So I don't think that's quite sustainable, and I don't think government can hold off the pressure up until 2020. Something will have to yield, and also government has to be creative enough. If you're looking at other nations, your Egypt, your Argentina, your Greece, these are nations which had to seek a bailout before they undertook reforms in terms of their monetary situations.
Interesting subject you brought up there, the bailouts. What would be Zimbabwe's potential to access that? Because I think
we do not have that potential. We do not have any leeway to even look at that at those prospects. I'm sure that if we were to get a bailout from anywhere, it was supposed to possibly be China or Russia or maybe something marginal from SA. But if you look at the quantities of monies that are needed to kind of stabilize the situation, we are looking at figures upwards of 20 billion or even 10 billion for starters. But this kind of money, it cannot be sourced anywhere at the present moment. And I think that's why we are in a fix. So you realize that when you are putting in a reform in terms of your currency, there are instabilities that are expected. And those instabilities can actually worsen into a full-blown crisis. That's why other economies have sought to cushion by getting these kind of packages. And therefore, for Zimbabwe, whose fundamentals have, some like me, believe that they have always been as fragile, it simply means that the outcome is not going to be anything okay. So I think we're in a fix. It's either we return back to where we were, or maybe we have to gradually be going towards a collapse. Although government has a different view, the Monetary Policy Committee, RBZ, and some obviously government supporters, they do have got a different view, but it's hard to see how we're going to come out of this. I think the national budget is our biggest indicator in terms of direction. If we are to spend anything beyond 30 billion, are we going to end that which we're going to spend? Because either way, at 28 billion, it means you have to at least make 20 billion in terms of national income. So are we going to raise 20 billion? We so far, year to date, we are sitting somewhat close to 12 billion thereabout. I think about 10 billion thereabout. So can we double that in 2020? That's the question. Are we going to see...
That's a tall order.
Yes, that's a tall order. Even at 20 billion, if you spend 30, it means you have got a $10 billion deficit. And that deficit, when you look at it in the context of the broader spend, that's 10 over 30. That's about 30%. So are you going to accept a GDP deficit which is 30% of what you would have earned? Or even when you look at it in the context of GDP, to say 10 billion, how much are we as an economy in terms of GDP? I don't feel that our figure is anything above 60 billion. And therefore, that simply means we are also seeing that high deficit to GDP ratio. So we are not in a very safe position. It's pretentious to pretend otherwise. I think government will have to find a way.
Now, as a result, industry is reeling from what we're seeing playing out at a global scale, so to say, as far as Zimbabwe is concerned. Let us say heavyweight Delta issuing their tidbits into their half-year performance. The lager volumes are down 40% in the quarter, 48% in the half year, while their sorghum volumes are also down 15% to 29% respectively as far as the quarter and the half year are concerned. What is your interpretation of these particular figures, and what do they spell out for this heavyweight?
I think when you're looking at Delta in isolation, I think this is the biggest listed company on the Zimbabwe Stock Exchange. It is one of the biggest players in industry anyway. But I think when you're looking at their performance over the past quarter, it really shows underperformance in all revenue lines, in all aspects of their business, be it sorghum beer, be it lager, be it alternative beverages, and even sparkling beverages as well. But this is on a quarter-on-quarter basis. The last quarter as well, we saw that decline. But in 2019 financial year, which ends in Feb, or between Feb and March, going backwards, we saw that in revenue terms, they were outperforming. But in volume terms, we started to see a decline in the second half of 2019 into 2020, where we are right now. So that really speaks to demand. Demand levels are depressed in the broader economy. People don't have enough to spend on their products, and this is actually due to falling real incomes. When inflation is going up, even your income in real terms is actually coming off, whereas the prices in terms of what they are charging on their products is actually going up. So that's quite a representation of what's happening elsewhere in industry. Consumers are foregoing products that are believed not only to be luxurious, but even some of the necessities, simply because they are unaffordable. So we're seeing a shrinkage in demand across the broader economy. But there's a narrative that government is also pushing. The economy favors those who are exporting. I think Delta has a bit of a hedge. They've been investing in Zambia, they've been investing in South Africa, and obviously over the long term, that might play out well in terms of cushioning them when our economy is actually falling. But as of now, I think 90% of their income is due from the Zimbabwe operation, and that really means it's a big deal. So it's a representation of what's happening in the broader economy. There is no spend. People don't have money to spend, and so we are likely to see a sustained depression in terms of their volumes as we get into the as we finish the first half period into the second half as well. I think for sparkling beverages, this has been a sustained decline since FY 2019. Now into FY 2020, it's still that loss in terms of volumes and also in terms of real income.
I realize now to talk about MIEKLES, there's a cautionary that says they've gotten some kind of a partial regulatory approval in as far as the disposal of their flagship hotel, MIEKLES Hotel, to Al Buabi Investments of course, Dubai. How important is that particular development as at this point? My line of reasoning is the earlier that they get to deal with this entire transaction, then everybody can get to move forward. We get to look at the effects of the particular disposal and we reconfigure, that entire business?
So I think as a company, MIEKLES has been doing good lately. I think they've been cushioned, especially by their retail business as well as their agri operations. But for hotel, specifically, if you're looking at MIEKLES Hotel, it has been doing good. It has been doing good, but their challenge with the hotel is that they don't have the capacity to convert it or to refurbish it into a modern day hotel. It would require them at least 50 million USD to make that hotel into a world-class hotel which competes with other global giants. If you look at the whole setup in terms of its infrastructure, or it needs to be modernized and redone in a way that they cannot afford at the present moment. So their best bet with the hotel is that they have to dispose it despite its other benefits that they're deriving as a group from it. But now, obviously, every other institution which undertakes such a move, they have to subject themselves to regulatory approvals and so forth. So it's kind of normal. What's really important is whether they will get a shareholder or not on the transaction. And I think that's quite given because the Moxon group, the Moxon family, who they hold much of the shareholding in the company, and therefore they will definitely push through the transaction. So the transaction is going to go through, and that money, I am sure that if it's committed towards the agri and the retail operation, I'm sure that the company can actually be going on a new growth pattern. On a year-to-date basis, they are up more than 200%, 243% to be specific, in terms of the share price. And investors, they believe their case. MIEKLES has turned the corner, and I believe that they're headed for somewhere better post the transaction.
I realize. Well, thank you, Respect, for the perspectives. Thank you, viewers, for staying with us. Don't forget to like, subscribe, follow us on Twitter, Facebook, and to visit our informative website, www.equityaxis.net. From the Equityaxis team and I, Danke, and have a splendid evening.
Climbing to the top takes more than just hard work and smart choices. It's the passion that drives you from within, the endurance to keep going through difficult times, and having a very clear vision of how to succeed. That's what we strive for at CBZ. We're a diversified and innovative listed financial services group in Zimbabwe with a complete range of activities including banking, short and long-term insurance, asset management, and property investments. CBZ has been a pinnacle for stability in the economic landscape of Zimbabwe, stemming from our deep-rooted values, our excellent customer service delivery, and our corporate vision to strive for excellence as a global competitor. Our continuous investment in research and development will cement our promise to provide customer convenience utilizing state-of-the-art technology. Relationships are at the core of what we do. We understand, however, that strong, long-lasting partnerships are not built overnight. With over 3 decades of wealth management, we have come to understand our clients and their specific investment requirements. Our unique mix of skills ensures that investment opportunities are examined from all perspectives. The balancing rocks of Zimbabwe have weathered the elements for thousands of years and stood the test of time, like majestic reminders of the fine balance of nature. They challenge our perception of what is possible and what endures. Just as CBZ has weathered the economic storms and remained steadfast throughout the turbulence of unsettled economies. Achieving the impossible through resilience and stability, we balance the elements of hard work, dedication, and experience, making us your ideal partner for success.